Today, we're going to talk about a major turning point in the Tesla story, a strategic change that's getting the financial markets excited. In this in-depth video, we'll look at why Tesla went from being a sell to a hold. Tesla makes more electric cars than any other company. Is this just a small bump in the road, or is Tesla about to make a big turn? Join us as we try to figure out how to get around the complicated lanes of market expectations, Tesla's risky moves, and how the auto industry is changing. We're going over every aspect of Tesla's success, including the improvements to the Model 3 and Model Y, as well as the risks that come with the stock and shares. Of course, no story about Tesla would be complete without talking about Elon Musk's risky moves as the company speeds towards a future that doesn't look like the norm. We're going to look more closely at Musk's big plan. Please remember to turn on the like and subscribe buttons before we start. Hello and welcome to Tesla Stock News. Let's begin. The exciting news is that our most recent study says Tesla Inc. is moving from a sell to a hold. Auto fans who have been paying close attention to the business, especially in the second half of 2023, will find this news interesting. With the predicted improvements to its Model 3 and Y, Tesla should be able to beat its rivals in the fourth quarter of 2023 and the first half of 2024. This shift in opinion is big, especially since people were worried before about Tesla's pricing plan when interest rates were going up and demand was going down. Tesla fans have a better future ahead of them. The company should be able to keep its profit rates in 2024 thanks to plans to cut costs that will be put in place the following year. Now let's talk about Tesla's much anticipated Q3 2023 earnings report, which is set to happen on October 18th. We'll look more closely at the complicated web of things that are affecting this very important time for Tesla. The upcoming earnings report is more than just a bunch of numbers. It shows how strong Tesla is and how well it has made smart decisions during a time of trouble and change. The results of this study should make it clear what effect the recent plant closings and Tesla's planned price cuts have had. As we get closer to the end of 2023 and the beginning of 2024, the risk-reward picture for Tesla stock is changing, which makes things even more interesting. During the Q2 2023 results call, Tesla's management said that they expected Q3 output to go down because of the need for several plant shutdowns over the summer for improvements. So these improvements are more than just regular upkeep. They are necessary to increase output capacity and efficiency, which sets the stage for even more progress in Tesla's manufacturing abilities. It is important to look at Tesla's life as a whole. The company is still on track to meet its big goal of delivering 1.8 million cars this year, even though there has been a short break. Even though this goal is hard to reach, it shows that Tesla is determined to boost production and meet the rising demand for electric cars. In this situation, the company's recent output and delivery results show that it can handle tough problems with great flexibility. The 7% drop in deliveries from one quarter to the next, or 43,559 cars, was a little less than what Wall Street had expected, but it should be seen in the context of operational problems and pressures on the global economy. Compared to Tesla's performance in the previous quarter when it shipped 466,000 cars, which was more than expected. The market expected Tesla to sell 445,000 cars last quarter, but the company showed that it could do better. This achievement greatly supported Tesla's ability to make money and run its business efficiently, even though the future was uncertain. There's no doubt that Tesla isn't just coasting, it's rising strategically in a field that is always changing. Their response isn't just a reply, it shows how committed Tesla is to quality and new ideas. Stay tuned as we follow Tesla's journey, which is expected to change the way cars are made and strengthen Tesla's position as a leader in the industry. As we learn more about Tesla's plan, there's a lot of talk about what Elon Musk is likely to do. He is likely to make his aggressive pricing plan even stronger in the second part of the year. For Tesla fans, this is where things start to get interesting because they start to worry about the profit gap. You might be curious about why Tesla's attempts to cut costs are speeding up the move to a better future in 2024. Now let's talk about Tesla's newest ideas, the changes they made to the Models 3 and Y, which have been very popular for a long time. Production slowed down for a short time this quarter because of these improvements, but Tesla's shipping numbers are expected to soar in the last quarter of FY23. Imagine the scene as Tesla continues to beat out competitors like Ford and Biden in the market for electric cars. You can't just stay in the race, you have to take the lead with style and new ideas. There's more though. Because of high interest rates and China's slower recovery, the car industry as a whole seems to be setting itself up for some instability. But Tesla looks like he is going in a different way. With its most recent lineup update, Tesla is not only ready to face these problems head on, but it's also expected to do better than the whole car business in the last quarter of 2023 and the first part of 2024. Looking at Tesla's finances is like looking at a fast, stylish racing car. It's more expensive, but it looks better. Even though Tesla stock is still very expensive, investors should be aware of a trend that will happen around 2024. Risk and return will become more balanced. It might feel like trying to catch a shooting star if you're thinking about buying in Tesla shares right now. It's tempting, but just out of reach. To get a better picture, let's do some maths. Comparing the price of Tesla's stock to its expected earnings per share for 2023, which comes to $3.36. This is a huge 74.9 times. This is a lot more than the average of 24.2 times for its peers. Just to give you an idea, Tesla's price-to-sales ratio is 7.8 times its expected 2023 sales, which is much higher than the average of 3.6 times for its peer group. For smart buyers like you, what does this mean? Just watching from the sides might be a good idea for now. It's like waiting to drive a Tesla until you're sure it's the right time for you. Tesla's rapid rise in the market means you should keep your eyes on the road, or in this case, the stock. Keep an eye on this space for news about when you might be able to make your dream of having Tesla stock come true. When you walk down the busy streets of Wall Street, you can't help but notice how cautious and negative people are about Tesla's price. Picture this: at this point, 18 of the 45 experts who are closely watching Tesla's stock say it is a buy. At the same time, 20 is being more careful and keeping their cards close to their chest with a hold grade. Still, the other experts are warning of a sell and recommending it. Let's talk about the facts now, since they always tell a good story. Tesla's stock is worth $252 per share right now, which shows how investors feel and what the market thinks will happen. After more research, the average price goal from the sell side is $265, which means that the price could go up by 5%. The average price prediction of $237, on the other hand, makes the curve thicker and shows that the price could go down by almost 6%. This makes it look like the stock is at a crossroads with different market players expecting different paths. You, the audience, are like people who watch exciting action films when you follow Tesla's stock. The story is even more interesting because each analyst's point of view adds new layers. We are still cautious about the auto industry as a whole, especially in the second half of 2023 when the market is likely to fix itself, but Elon Musk's leadership of Tesla seems to be taking the company in a new direction. When looking ahead, especially to the last quarter of 2023 and the first half of 2024, Tesla looks like it will do better than its rivals. It's like a strong ship that can handle rough seas better than others. What makes people so hopeful? Elon Musk, the CEO of the company, deserves a lot of praise for his smart actions. When he plays chess, his strategy is like that of a grandmaster. Every move is planned and part of a bigger plan. This is really important when it comes to costs. Musk's choice to lower prices is more than just a way to stay competitive. It's also a smart move, like a chess player giving up a piece to get a better position on the board. In addition to making Tesla cars more appealing to buyers, this strategy could also hurt competitors and possibly speed up the growth of the electric vehicle business as a whole. To fully understand how deep this plan goes, you need to look at the bigger picture of why these price cuts are happening. Pricing is a big deal in the electric car business, and it can affect how quickly people buy them. Tesla's price cuts not only make its cars more affordable for a wider range of buyers, but they may also set a market standard that makes it easier for people to buy and use electric vehicles in their daily lives. Musk's strategy also seems to be a reaction to the way the economy is right now. When the economy is unstable, people are more price conscious. Tesla's price cuts may have been a calculated reaction to this, making the brand more appealing and easy for people who are thinking about repurchasing to access.